Well, as promised, we have Arvind Fashions, the management joining us now. Q4 was a good growth in profits because of lower discounting along with higher contribution from the retail channel. Their EBITDA margin improved and they have added 24 new stores in Q4. Kulin Lalbhai, the Vice Chairman and Non-Executive Director of Arvind Fashions is with us. Kulin, hi, good morning. It's been a while since we've spoken to you, so good to see you on the channel. I want to ask you about what the market has looked like, because overall the commentary that we've had from you is that the market has been subdued for the past couple of quarters. Consumer buying patterns have changed a bit. But how is it looking like right now? For FY25, do you see any kind of conclusive recovery in demand?
Yes, so, the last few quarters, in fact, have remained subdued for our industry, post-Diwali. The market hasn't seen too much exuberance. Within that construct, I think, one should de-average it. I think there is a good sort of momentum for the premium side of the market. Our two brands, Tommy Hilfiger and Calvin Klein, which are our bridge to luxury brands, have done exceedingly well. In fact, they've possibly done the highest level of growth in both top line and bottom line last year. So there are parts of the market really performing very well. The belly of the market, is where we've seen a little bit of sluggishness in demand. We do hope that as the year moves on in FY25, we do expect some of that demand to come back, and perhaps as we move along, we will see an improved momentum.
Okay, you'll see an improved momentum. What do you mean when you talk about improved momentum? Because, I'm just going through your power brand segment, right? Just going through it one by one. There was barely a single-digit growth on the top line this time, as well as in FY24, 5% growth is what you saw. Do you hope to get to double-digit in FY25?
Yes, so in FY24, I'll just point out, especially in Q4, most of our channels grew at double digits. The reason why the overall growth came to a single-digit growth is that in one of our channels, which is the department store, we had a little bit of destocking happening. So it's more of a phasing between Q4 and Q1. But the underlying growth is very much closer to double digits in Q4. In the full year FY24, again, there was a channel where we had a little bit of a pivot which is our online channel. We have moved from a B2B wholesale model more to a direct retail model in online, which had a little bit of a one-time impact on our growth. But if we look at the company today, I'm very confident of the growth drivers we have in place. The coming year is going to see strong square footage addition, much higher square footage addition than we had in FY24. We've got a lot of exciting retail formats which we are now rolling out across the country. Our adjacencies, which is footwear, innerwear, kidswear, and we've launched women's wear recently. All of them are clocking very high levels of growth. So I am confident that FY25 will see a much higher level of growth than what we had in FY24.
Got that. Kulin, hi, morning. Prashant here. So for the adjacent portfolio, you also sort of guiding that this will expand to a much larger share of your overall business, right?
Yes, it's around 15% today. It's been growing at more than 20% for us. So with that kind of trajectory, we are expecting it to become 20% of the business, in the near term. So it is at a much higher level of growth today.
And here, are you kind of sort of what are you most excited about? Is it the kids' wear segment?
So we are excited about quite a few, but the one I'd like to call out a lot is our footwear business. I think, footwear is seeing a structural shift where a business that used to be largely formal, which was the leather black and browns, is moving to a completely fashion sneaker, territory. And our company's core competency has been the casual lifestyle. And we achieved that pivot in the apparel side of the business. And, we are very excited that with this structural shift and our portfolio of brands, we want to replicate something very similar in the footwear side. So, we've got now a 300 crore footwear business, which is scaling up very fast. And we are excited about the potential of that business.
And this is in terms of price point, where is this at, the footwear business?
It kind of mirrors our apparel strategy, which is that our sweet spot is to go after middle India. our largest brand, US Polo, is now a 2,000 crore brand. It's the largest in its category. And the footwear part of that business is seeing huge potential. So I think the middle India is where a lot of consumption growth is going to come. And that's where we will see a large part of this business as well.
Okay. So any more insights that you can give us into what's happening? Because, the sense that we get from a lot of players we speak to is that tier 2, tier 3 cities are picking up now quite a bit, even in the premium and luxury spaces. Is that a sense that you're getting as well, that this K-shaped recovery that everyone's talking about, premiumization, is not only in metros, but also in like tier 2, tier 3, slightly semi-urban areas?
Yeah, so if you take a step back, what is happening in the apparel business is that there are two types of movements happening. One is that customers are going to pay more for differentiated products and aspirational products. On the other side, there is the value side where sharp price points with a lot of efficiency also doing well. So it's the middle that kind of will come under pressure. So if there are brands which are constantly innovating, constantly creating differentiation, creating aspiration, that will keep those brands relatively in a much better position. So as a company, what we've done the last year is we've really focused on energizing our core brands. We've invested much higher in marketing. We've had 100 bips increase in marketing spend. So we have improved our bottom line by 150 basis points, even after investing 100 basis points more in marketing. We've really upgraded our retail experience, and we're constantly premiumizing product because we believe the brands that will really focus on differentiated aspirational experiences are going to win in this sort of market. And that's what we are doing across our portfolio. And I think if you look at both tier 1 and tier 2, as a matter of fact, even tier 3, there are enough consumers who are wanting these differentiated aspirational products. And I think that's the arc that we are driving towards in our company.
All right. And you're saying that ad spends will remain around the same 4% of sales level, right? In FY25 as well. You're seeing and of course, overall, you're expecting a 12 to 15% growth in revenues for the full year. Kulin, great conversation. Thank you very much. Good luck to you and your team. And appreciate you joining in here on CNBC TV 18.